Good afternoon, everyone.
Good afternoon, sir.
Yeah, you want me to do a which subject, investment or taxation?
Taxation, sir.
Okay. Give me a minute. Okay. So this is where we had stopped in the last class of taxation. I think I had discussed you estimated income for any business, right? This is where I had discussed. And now, yeah, I think we have discussed this. This is for estimated income for any business. Next was estimated income for profession. Clear? And now we'll move on to estimated income for a transport business. Now this is very important for us to understand. Okay. Are you with me? Are you able to understand what I'm talking about? I'm talking about income from business and profession. We have discussed deemed profits. Okay. And we have moved from deemed profits to what books of accounts have to be maintained by whom. That is what we have discussed. And now there are some businesses or there are some professions wherein certain books of accounts need not be maintained. And if you do not maintain any books of accounts, there is a concept called as estimating your income. Or, there's a concept called as estimation of income. So when you're not able to distinguish or when you're not able to keep any books of accounts ready with you, if you're not sorry, if you're not able to keep any books of accounts ready with you, in such case, your income is going to be on estimated basis and not on actual basis. That is what is this particular point talking about. So like that we have seen, if you are running a business and if you are not maintaining any books of accounts, then whatever is your turnover, I'll just go back to the slide, just brush up. Whatever is your turnover, condition is your turnover should not be more than 2 crores annually. If your turnover is less than 2 crores, then 8% of whatever turnover that you declare, that amount is going to be considered as your income, and accordingly you have to pay tax on that particular income, right? Say for example, I am running a business, I am running a small kirana store, and I do not maintain any books of accounts. I declare to the income tax authorities that my annual turnover is just 1 crore. My annual turnover is 1 crore. So if my annual turnover is 1 crore, 8 8% of that will be considered as my income. What is 8% of 1 crore? What is 8% of 1 crore?
8 lakhs.
So 8 lakh rupees will be my annual income. 8 lakh rupees will be my annual income. So on this, I am liable to pay tax on this particular income. Now, if you say that, how can you, how could you declare that I'm earning 8 lakh rupees? You say that you are actually earning less than 8 lakh rupees. Then in that particular case, you have to maintain the necessary books of accounts. If you do not want to pay tax on 8 lakh rupees, then you have to maintain proper books of accounts. And if you maintain proper books of accounts, and in that particular case we come to know that your turnover is not even 1 crore, your turnover is just 80 lakh rupees. I'm just giving a random example. Your turnover is 80 lakh rupees, then whatever is your net profit, on that you have to pay the tax. Okay. This condition is applicable only if you do not maintain proper books of accounts. If you maintain proper books of accounts, then there is no need to have all this. But all businesses do not maintain proper books of accounts. That is the reason this clause has been inserted. Now slowly in the next financial year, according to me, this clause is going to go out. The reason is everything is moving to GST. Everything is moving to GST. So if you are a taxpayer under GST, you will definitely have input of goods for which you have to maintain records, and definitely you will have output of goods, that means your sale. Okay, so in between whatever you do, that is your business. So for this you have to maintain books of accounts, and slowly this concept is slowly going to go out of income tax rules. Okay, that is income on estimated basis. This is my view, because since GST is going to come in a strong way, and you need to maintain all books of accounts as far as purchase of stock is concerned and sale of stock is concerned, naturally you will have to uh, maintain all books of accounts. Anyways, this is a section for business. Okay, this is a section for estimation of income for business, that is section 44 AD. Next section is same. Okay, it is estimation of income for a profession. That was for a business, this is for a profession. Okay, and what is a profession? It could be legal profession, it could be a doctor, it could be a structural engineer, it could be a technical consultancy, a chartered accountant, company secretaries, cost accountants, and architectural professionals. All these people who have taken thorough training and who declare themselves as a profession, and if they are not maintaining any books of accounts, then what, how do we estimate the income for such people? The condition is that your turnover, okay, that your business should not exceed 50 lakhs in a year. If it is, if it goes greater than 50 lakhs, if it is greater than 50 lakhs, then naturally you will have to uh, maintain all books of accounts. But if your business turnover is less than 50 lakhs, then only 50% of whatever income that you declare, that will be considered as your, that would be considered as your, sorry, yeah, that would be considered as your income. 50% of your gross receipts will be considered as your income. Clear? And if you still feel that uh, that I do not have to pay so much amount of tax, or this is not my income, then you have to maintain proper books of accounts. So that is what we are talking about as far as this particular section 44 ADA is concerned. Yeah, Tejaswini, you want to say something, Tejaswini?
Sir, no.
Yeah, I saw your hand going up. That is the reason. Okay. Anyways, next, next we are talking about income when it comes to flying of transport business or going for a transport business. So if you are in a business of transport, okay, if you are in a business of transport, let me just go here. So if you are in a business of transport, okay, then what is happening here? Just give me a second. There's something wrong with the system. Can you see a red color patch on the screen?
Yes, sir.
Just give me a second. I don't know what's happening. Yeah. So now this particular section called as section 44 AE. Section 44 AE talks about how do we estimate income in case of a transport business. So this is very important because there are many people who are in the business of transport. There are many people who are in the business of transport, and that is the reason how do we estimate the income for such people is an important task. Now look at the conditions. Okay, just go through these conditions first, and once you go through these conditions, I'll tell you what are the points that you have to remember. Okay, just go through these 5 or 6 points that are there. Have you gone through it? Have you gone through it?
Yes, sir.
Yes, sir.
Okay. Now, what is the condition to make use of this particular section 44AE? Again, I repeat, section 44AE is for the business, and that the business has to be specifically of flying of trucks, leasing of trucks, or hiring of trucks. Okay. Now, what is the first condition? The condition is that the scheme is applicable for those people who are owning not more than 10 trucks. So you should not have more than 10 trucks in the last financial year, or during the previous year you should not own more than 10 goods carriers. That is the first condition. Okay. Second, all these trucks that you have been using in the last financial year or in the previous year, it need not be owned. That means, suppose I have altogether 9 trucks. Okay, I have 9 trucks. Out of these 9 trucks, I am owner of only 3 trucks. I own 3 trucks. Okay, I have paid money and purchased it. The other 3 trucks that I have, I have taken it on a lease for 10 years. The other 3 trucks that I have taken it on a lease for 10 years. I don't own that trucks. I have taken it on lease. Okay, and the remaining trucks that I have, that is the 3 more trucks that I have taken them on rental basis. I have taken those trucks on a rental basis. That means somebody is the owner. Okay, he does not want to make use of his trucks, so I asked him that I will rent out these trucks, and I'm paying him monthly rent or yearly rent, whatever. So in all, under my business, I have 9 trucks. Now, of these 9 trucks, only 3 trucks are owned by me. The remaining 6 trucks are not owned. In spite of all this, I can still make use of this section 44AE for the simple reason I am plying the business of transport. The word is here. I am plying into the business of transport, and I do not own more than 10 carriages in the financial year. By using these two concepts, I can still run this business, and I need not maintain any books of accounts. Okay. And if I'm using this particular section and if I'm not maintaining any books of accounts, whatever is the condition, the income tax authority will consider that my monthly income is going to be 7,500 per month. I'm going to earn 7,500. This is my estimated income. Whether I do some business or don't do business, the government authority or the income tax authority is going to say, whether you ply trucks or you don't ply the trucks, you switch off the engine and keep it at one place, we are least bothered. We will consider that your monthly income is going to be 7,500 rupees per month, and accordingly we are going to be taxed for the next financial year. This is how this concept works out. Okay. Now, in case if the assessee wants to declare higher income or lower income than this, he is free to do so, but the condition is that he has to maintain proper books of accounts. That means he has to keep a concept called as, now there is, whenever you want to, we are into a cargo business, you want to shift goods from point A to point B. If you want to shift your goods from one location to another location, you have to make a e-way bill. Okay, there is concept called as e-way bill. Okay, that's a transport receipt. Okay, and this entry you have to pass it in a software called as Sugam, SUGAM. Okay, so this Sugam software will directly connect it to the commercial sales tax office. Commercial sales tax office. They will come to know. Sorry. They will come to know that you have transported goods from location A to location B. So, on what date you have transported, what is the bill amount, what is the weight, what type of goods you have transported, everything will be entered into this e-Sugam network. So accordingly, they will track how much is your income. So this is one way. Today, everything is happening through e-way bill. Okay, gone are the days when you just called up any random person. You said you transport, no, all these goods from one location to another location without bill. Now nobody does that except for, what is that? There's something called as USD, undisclosed distributor or unregistered distributor. Only for them this concept is applicable. Okay, don't scratch your brain as of now. That will come in GST, which we'll study very much in detail. But as of now, just understand this, that if you are in a business of transport and you are owning not more than 10 trucks, you can make use of this section called as section 44 AE, wherein there is no need for you to maintain any books of accounts, and come what may, your monthly income is going to be fixed at 7,500 rupees per month. This is important for you to remember. Clear? Any doubts here? Any doubts, please?
No, sir.
Next, uh, in case of expenditure towards scientific research, if you make any expenditure towards scientific research, you get a deduction for it. Okay. Now, what is a deduction? I'll just go through this and then I'll explain to you, and we'll study this practically in problems. When we are discussing problems, we'll discuss all these things. Don't worry as of now. Just go through this. In plain and simple words, I'll tell you what is it. Okay. Suppose we have who is there? Let me take who is this. Okay. Suppose we have Dhanashri here. Okay, we have Dhanashri here, and Dhanashri is into, please understand, I'm explaining you the concept of scientific research. Suppose we have Dhanashri, and Dhanashri is into a business of paints. Okay, I'll just write down here. She has a business of paints. So she is a distributor of Asian Paints or Nerolac Paints or whatever. She is a main distributor for this particular area as far as paints is concerned. Her nature of business is trading. Okay, she's a trader, right? Now, now when she is a trader, she is into the business of paints. Okay, she found out that by mixing some chemicals in paint, the durability of the paint can be enhanced. She found out, she read it somewhere, and she found out that if you add a component Y to this particular paint, the durability of the paint is going to increase. So this, just thought of it, and she did some research. She came to know about it, but there is no authentic proof for what she said. So what did she do? She approached one of the approved national institutes. Okay, she approved a institute called as NCL. NCL stands for National Chemical Labs. Okay, it is run by the government of India. NCL is situated in India at a place called Pune. So she approaches this particular institute and says, I am in a business of paint. I found out that if you add XYZ component to this particular paint, the durability of the paint is going to enhance. I want you to do some research on this and tell it. So she approaches NCL. NCL says we'll accept the project. Okay, and NCL tells them that we are going to charge, let us say, 2 lakh rupees as our fee for doing this particular research. We are going to charge 2 lakh rupees as fee for doing this particular research. Okay, Dhanashri says approved. I am ready to pay 2 lakh rupees, but you do the research. Now, in this particular case, the research is done by NCL. So what has Dhanashri done? Dhanashri has given money, or she has incurred an expenditure. Why? To find out something. It is of scientific nature. It is of for some scientific research. Now, this 2 lakh rupees that she has paid is an expense for her, right? It is an expense for her. Now, in her P&L account, she will write, okay, expenditure towards NCL for research work. She will write this entry and pass it. But, and she will write the amount. She will write the amount as 2 lakh rupees. Now the government authorities say, or the income tax authorities say, since you have funded a particular project, worth 2 lakh rupees, you need not take an expenditure of 2 lakh rupees, but you can take an expenditure of 150% of 2 lakhs. Can you tell me what is 150% of 2 lakh rupees? Can somebody tell me what is 150% of 2 lakh rupees?
3 lakhs.
Yes, it is 3 lakhs. 150% of 2 lakh rupees is 3 lakhs. So income tax authorities say, don't say that your expenditure is 2 lakh rupees. Your expenditure is actually going to be 3 lakh rupees. Why? Because you have given money for scientific research. By doing so, you are not only going to help yourself, but the entire country is also going to be helped because of this. And as a result, though you have incurred an expenditure of 2 lakh rupees, but you can claim an expenditure of 3 lakh rupees. This is an extra benefit that the income tax authority gives you. That is what we call as expenditure towards scientific research. So if you give it for any technologically based institute like IIT, okay, NPL stands for National Physics Lab, which is based in Hyderabad. NCL, which is National Chemicals Lab, which is based in Pune. All India Institute of Medical Science. If you give it to IIV, that is Indian Institute of Virology, again Hyderabad. If you give it to IIS, Indian Institute of Science, any money that you give to all these institutes, you are eligible to claim 150% of the whatever expenditure that you incur. But if you give it to any association or any university which is of not this nature, suppose you give money to VTU, it's a university, right? For such case, only 100% of the deduction is permissible. Here 150 is permitted, here only 100% is permitted as deductible expenditure. Clear? So this is what you need to understand as far as scientific research is concerned. Any doubts in this? You understood this example of Dhanashri having a paint shop? Have you understood this example?
Yes, sir.
Dhanashri, have you understood this example?
ಅಲ್ಲಿ ಐತ್ ನೋಡಿ ಟೇಬಲ್ ಬಡ್ಡೆ.
Okay, we'll move on. Next is, can anyone tell me what is the meaning of the word amortization? What do you mean by the word amortization? Can anyone tell me?
Increase in the value.
No, amortization, appreciation is increase in value. Amortization is not increase in value.
The decrease in
Intangible
value
assets.
of intangible.
Yes?
Spreading an intangible assets cost over the assets useful life, sir.
Once again, Rohin, once again.
Patents and trademarks.
No, once again.
Sir, that patent, trademark,
No, these are
sir,
assets.
intangible assets. Yes, sir, intangible assets that are expensive.
No, but what do you mean by the word amortization is my question.
So decrease in the value of intangible asset.
No.
As in, if depreciation is for tangible asset, amortization is for intangible assets.
Means what?
So that's what decrease in the value.
It is not decrease. It is spreading the cost over a period of time.
Yes, sir. Yes, sir.
It is spreading the cost over a period of time. That is what we call as amortization of expenditure. That means you have constructed a building. The cost of the building is 50 lakhs. Are you going to show 50 lakh rupees as expenditure only in 1 year in your P&L account? No. You're going to use this building, let us say, for 10 years. So every year you have to show 5 lakh rupees towards building expenditure, right? So you're amortizing this particular expenditure of 50 lakh rupees over a period of 10 years. That is what we call as amortization. Amortization means basically spreading the cost over a period of time. Spreading the cost over a period of time. That is what we call as amortization. Clear? Now, in case you have any expenditure which is incurred one time, okay, how much time do you have for amortizing it? That is the meaning in this particular slide. So suppose there is a company which has given VRS to its employees, and by doing so, the company incurred an expenditure of say 10 lakh rupees. Now this 10 lakh rupees is not a one time expenditure. You need to spread this 10 lakh rupees over a period of 5 years. That is what it says. So which means every year you have to debit only 2 lakh rupees to your P&L account. Okay, if you are in a business of minerals, then you have a prospect for 10 years. In all other cases, you have for only 5 years. So here you have 5 years, here you have 5 years, here you have 5 years. Only for mineral extraction business, you have a period of 10 years. So amortization is nothing but spreading your one-time expenditure over a period of time so that small amounts of money can be debited to your P&L account. In other words, you will not incur a loss only in 1 year, but you will spread this particular value, spread this particular cost over a period of certain number of years. That is the meaning of the word amortization. Clear? So in case you have incurred any expenditure which is a one time expenditure, then in that case entire amount need not be debited to the P&L account. Depending on what the amount is, you need to amortize that particular amount based on the number of years that is given, and accordingly claim the amount in your expenditure side. Clear? This is the meaning of the word amortization. Now, what are the other deductions that go into your P&L account, or what should go into P&L account? All are mentioned here. Please go through this. All these are nothing but expenditures that come into your P&L account. Okay, just go through all this.
So for internal exam, what all are there, sir?
What happened?
So for internal exam, topics, sir. Syllabus for internal exams.
You tell me, what do you want?
So till now, how much you have completed?
Okay, so you'll have capital gains,
Yes, sir.
and income from business and profession.
Yes, yes.
This is for taxation. Okay, this will not include, please understand, this will not include partnership accounts, there will be no partnership accounts in this. There will be no set off and carry forward of losses, because set off and carry forward of losses is a altogether different unit. I will not mix up with this. Okay, so only you have capital gains and income from business and profession. These things will not be there. This will be there for your third eye test.
Yes, sir. So the exam will be a written exam or MCQ, sir?
If you come to the campus, written exam. If you are sitting at home, MCQ.
Okay,
That
sir.
decision has to be made. They are in the process of making that decision. Whether you should be called, you should not be called. If you come, you have to get your swab test done. All those things are there. So just wait. We'll let you know. Portion for income for investment management is going to be entire bond valuation, bond and equity valuation, plus you will have uh, some concepts of risk and return. Some concepts of risk and return. Okay, or else, or else we still have time, then I will start some portion of fundamental analysis. If I include fundamental analysis, which I will tell you whether I'm going to include or no, if I include fundamental analysis, this will not be there. Risk and return will not be there. If I exclude fundamental analysis, then risk and return is going to be there. This is the syllabus for your investment management. Clear? Okay. Now, please go through this other points. Please go through these other points. Yeah, please go through these other points. These are the expenditures that will come into your P&L account, which are permitted as expenditures. Okay, if you don't incur these expenditures, then you cannot run the business. Next, shall we proceed?
Yes, sir. Sir, that additional depreciation problem you have thought, no, so that three-step problem.
Mm-hmm.
Sir, in that question you have given the normal depreciation rate as 60%. I guess 15, 30 and 60%, sir. But in the answer while solving the second step, the normal rates are 15%, 30% and 40%, sir.
There is some mistake. I'll correct it.
Yes, sir. Yes, sir.
I'll correct
Sir, 60% has been cancelled, no, sir. Now only 40% is there in the block rates of the depreciation.
60% is there. It is there only
Yes, sir.
for softwares.
Softwares, yes, sir.
Only
Aeroplane
softwares.
something is.
Earlier, hardware, computer hardware was also included in that 60%. But now computer hardware is no longer included in 60%. Only the software is included in 60%.
Yes, sir. Yes, sir.
Hello, sir.
Yes.
Sir, for 4th, 5th, and 7th, right? IA dates.
4th, 5th, and 7th. Yes.
Okay, sir.
Okay. Through? Just go through this. So when you write any expenditure in your P&L account, care should be taken. Care should be taken that these expenditures are not of capital nature. First condition that you have to take. Second, no personal expenditure has to be put in your business expenditure. Okay, and whatever expenditure has been included in your P&L account, it has to be strictly for the purpose of business. Any other expenditure that you incur which is not related to this particular business should not be mentioned in your P&L account. That is what it says. That is what section 37 says. Clear? So there is nothing much to explain here. So I cannot put expenditure incurred by Narayan. Narayan has his business. Narayan has some business of textile or garment business, and I have a business of glass and glasswares, right? So whatever expenditure that he has incurred in his business, I cannot put the same expenditure in my account, right? That is not permitted. So it has to be strictly for business. It should not be of personal nature, and there should be no capital expenditure mentioned in your P&L account. These are the points that you have to take into consideration as far as section 37 is concerned. Okay. Uh, yeah, just go through this and then I'll stop here. In fact, just go through this. I'll not be able to discuss this. We are running out of time. Okay, what does this say? it says that if you make any payment, okay, if you make any payment without deducting TDS, TDS stands for tax deducted at source. If you make any payment to anyone which are of this particular nature, if you make any payment which are of this particular nature without deducting TDS, then such expenditures will not be allowed to be written in your P&L account. That is what it says. Suppose I am paying, I have taken a loan. Let me say in this way, I have taken a loan from Narayan. I have taken a loan of 2 lakh rupees from Narayan, and Narayan is going to charge me 10% rate of interest. So what is 10% of 2 lakh rupees? What is 10% of 2 lakh rupees?
20,000, sir.
20,000. So I am liable to pay 20,000 rupees as interest to Narayan, right? So when I pay this interest, it is an expenditure for me. So naturally I have to pay as interest payments. In my P&L account, I have to write the value as 20,000 rupees. This will not be allowed as a business expenditure if I do not deduct TDS on this. In other words, TDS rate is 10%. So I have to deduct 10% of the interest that I'm going to pay. What is 10% of 20,000? 2,000 rupees. Okay. So in other words, I have to write interest payment 20,000 rupees less TDS 2,000 rupees, and I have to pay Narayan only 18,000 rupees. If I do not deduct this 2,000 rupees and I do not pay this TDS to the government, then entire amount will not be liable to be written in my P&L account. That is what it is the meaning of this particular section. And this is applicable for interest, commission, brokerage, rental fees, technical fees, professional fees, securities, transaction tax. All these things are included in that particular section 40A. Clear? So I'll do one thing. I'll stop the class here. I'm running out of time. I'll stop the class here, and in my next class, I will continue from where I had stopped. I'll explain to you section 40 once again. Okay? Please come in the video mode. Just a minute. Yeah, thank you. So I'll stop the class here, and in my next class, I'll continue from where I had stopped. Okay? By the way, from Monday, I'll be starting with compensation also. So I'll cover up unit number 5.